and welcome back to Nonprofit Auditor Points. I'm Irina Oshkova, your nonprofit auditor, and we continue Form 990 series. In the last episode, we talked about why financial statements on the Form 990 often do not match your audited financial statements or statement from your accounting records, statements per books, and how those differences are intentionally explained through reconciliation process in schedules in the Form 990, and how governance needs to understand those reconciling items. Today we're moving into the most sensitive and misunderstood area of Form 990, Schedule L. Schedule L covers transactions with interested persons. This schedule tends to make board members very uncomfortable, sometimes even defensive, and often confused. That reaction is understandable because nobody wants to be disclosed. However, it is important to start with a clear principle. Disclosure on the Schedule L does not mean something improper occurred. Again, to remind that main reason for the Form 990 is compliance, transparency, and accountability. Schedule L serves that goal. Schedule L exists to provide transparency. Its purpose is to allow the IRS and the public to see when transaction occurred between nonprofit organization and individuals who have influence over it. Again, it does not mean anything wrongdoing. That's just disclosure. Schedule L focuses on transactions involved interested persons. This includes officers, directors, trustees, key employees, and in some cases, their family members or entities that they control. The IRS specifically used term interested person very deliberately. These are individuals who have the ability to influence decision, approve transactions, or otherwise affect how operations happens. Schedule L covers several categories of such transactions. Let's go over each category and explain. One category involves loans between the organization and interested persons. This includes loans made by the organizations to insiders, as well as loans made by insiders to the organizations. So it can be loans receivables or loans payables to interested persons. Another category involved business transactions, such as payment for goods or services provided by interested persons or by entity that the interested person controls. Schedule L also captures certain assistance transactions, such as grants or other financial assistance provided to interested persons. A key point is that Schedule L is not limited to cash transactions. It could be in kind. It includes agreements that create economic benefit, financial exposure, or potential conflicts. One of the most common misunderstandings about Schedule L is that belief that disclosure implies something was wrongdoing. In reality, many disclosures, again, just transactions that are permissible, reasonable, and properly approved. They just need to be disclosed. What the IRS and the public wants to see: the transaction being disclosed, the terms are reasonable, the conflict is identified, and appropriate oversight occurred. Because these transactions carry some sort of risks which could be mitigated and transparent to the public. This is where Schedule L connects directly back to the governing policies that we discussed in previous SNAP. Organizations with a strong conflict of interest policy documents and approval process of such transactions. And disclosure makes very clear and easy. Another important point for the board to understand is that related party transactions do not have to be avoided to all costs, but they must be handled carefully in accordance with the policies. In some communities or specialized fields, it actually might be practical or even necessary to work with the board members or their businesses. Transparency and documentations are what protects the organization from such transactions being misunderstood as something wrongdoing. Schedule L also captured transactions involved entities that controlled by insiders, not just transactions with individuals themselves. This often surprises board members, especially when they do not view their business interests as connection to the nonprofit role. But if the nonprofit use the businesses where they can exercise the control, it's considered related party. For example, if the board member owns or controls company that provides services to nonprofit and the organizations pay the company, the transaction may need to be disclosed on Schedule L, even if the board member does not receive any direct compensation or payment personally. From the public perspective, Schedule L is read alongside with the Part 6 and compensation disclosure. Together, they paint a picture of how conflicts are managed and whether governance practice is intentional. For the board members and executive leadership, Schedule L should be viewed as review and discussion trigger. If transactions appear on Schedule L, leadership should understand why the transaction occurred, how it was approved, whether it was consistent with the policy, and how that transaction is explained to public. If no transaction appear, leadership should still understand why is the case and whether monitoring processes are in place to ensure that all reportable transactions are actually included in the Schedule L. Again, this Schedule L, it's not about fear or avoidance to report related party transactions. It's about awareness and accountability. In the next episode, we will continue building on this governance theme by talking about related organizations in the Schedule R. We will clearly identify what related really means for nonprofit organizations and why sharing an executive director does not automatically create a related organization, and how board control determines these relationships under the IRS rule. For now, the key takeaway from the today episode. Schedule L exists to provide transparency, not to accuse. When transactions with insiders disclose clearly and governed properly, they improve credibility rather than weaken it. You should not be afraid of transactions with interested persons at all costs. They might be necessary and sometimes even recommended, depending on the industry and services that nonprofit provides. Thank you so much, and I'm looking forward to see you for the next episode. Have a wonderful day and be safe.